Hi, few days ago I made a video saying this.
Adani के shares है तो बेच दो and don't even consider buying them for next 1 or 2 years.
So now we are going to discuss it in detail. First, we'll talk about a few things that Adani Group has not answered or has cleverly dodged from Hindenburg report. Second, we'll talk about Adani fundamentals and how strong the business is. Third, we will talk about the geopolitical impact of Adani Group along with the Indian government and what all is happening. Fourth and the last, I will talk about my own opinion about why I have never invested in this stock and why I would not invest profitably even in the future. So Hindenburg pointed out that there are a few offshore entities in Mauritius that have 90 to 99% of their total holdings invested just in Adani. Further, they also pointed out that these are related to Adani via previous relations and previous business deals that Adani has done with few entities. And Adani just went ahead and said, we cannot control what the public wants to buy. If it's bought publicly, it's not in our control. And if you're suggesting that this is a related party, it's just an innuendo, nothing more. But it was not a satisfactory response. Second, the Hindenburg report pointed out that the SEBI has investigated and prosecuted more than 70 entities and individuals, including Adani promoters, for manipulating the stock between 1999 and 2005. Now, the response to this from Adani, again, unsatisfactory. They said that we are not responsible for knowing what's happening with these entities. And again, all these proceedings have been dealt with. But the question mark on the integrity of Adani was not answered at all. There was no denial. There was no other form of, I would say, presentation that guaranteed that no, this is wrong or there was some confusion, nothing like that. So basically, that was accepted in my opinion. Now, Hindenburg report also included a 2007 SEBI ruling which declared that Adani promoters had aided and abetted famous market manipulator Ketan Parekh in his manipulation of shares of AEL, which was a previous entity to Adani Enterprises. Now, again to this, Adani just said that this was incorrect and the matter had been previously settled without answering it. So these are a few red flags that pose integrity issues and issues of governance, which definitely point you in the direction where you need to think as an investor whether you can invest or not. But before going to that, let's look at the fundamentals first. So here is a response from Adani Group, where you can see that the EBITDA has grown 2x compared to debt over the last 5 years. And this indicates a very strong and healthy balance sheet position. What does this indicate? This indicates that the group had leveraged lots of loans previously to build a lot of infrastructure and investments. And now as they're repaying it effectively, it's going down. This is a good sign. This is not a bad sign. Now here you can see the gross pledge position for promoters. It had gone up in 2020, which is risky, and then it gradually came down, and today it is at a very safe level compared to 2020. Not completely safe again, but this again indicates a higher efficiency in debt repayment, which is again a good sign. Now, amidst all of this, Adani Group has prepaid $1.1 billion worth of loans. Now, this seems like a very good news. These were supposed to be paid in September 2024, but they got prepaid right now. And I think the main reason this was done just to calm down investors that, look, we are safe, we are still repaying loans, it's not an issue. Because that is honestly the most fundamental risk right now for the business. But this is not a very big number. 1.1 billion sounds big, but it is just 1.4% of promoter holdings in Adani Transmission that will get released because of this prepayment. What you can see again from this is a lot of trading in Indian markets is momentum driven and news driven. Fundamental analysis is not the focus many times. But I have never invested in any stocks of Adani because of fundamental lack of valuation. I've always seen it to be overvalued, just like many other valuation professionals, including Aswat Damodaran. So I'm going to attach a link in the description where you can see what Damodaran says about this stock and the whole saga. So even he says that although it does seem like Adani may have played dirty, it's no denying that the business is strong and still investable, but he will not invest because the fundamental valuation suggests that the company has been trading way above its real value. And that is one more reason why you should reconsider if you want to invest in Adani for long. So coming to the geopolitical scenario, you can see why this company, or Ambani's for that matter, are heavily favored by the government. First, they generate a lot of employment, which is obvious. Second, due to this employment, there's a lot of contribution to the GDP as well, which brings to the third point, geopolitical impact on the country. Ports are of very important significance for India when it comes to dealing with China and US. These are among the top most important things today, especially countries like Sri Lanka and Tanzania, which are in the Indian Ocean and are of very good strategic importance for India. Now, apart from Adani, there aren't any strong people that are giving a tussle to Chinese and US players. This is why you can see Adani has been aggressively expanding in Sri Lanka as well as Tanzania and a few more African countries, which is again leading to a lot of government backing, as it should happen. So let's not be jealous of the group for getting government backing, because I don't believe that the fundamental numbers of the business are manipulated. So coming from an investment perspective, my outlook is this. Even after the price decline, these company stocks still seem heavily overvalued to me, which is why I will not be investing in them. And I also was appealing to all of you to not invest in them for next 1 or 2 years. But here's the main reason for that. The debt repayment is what will trigger a lot of value unlocking. Once the debt is repaid and the risk reduces, you will see that the value will definitely get unlocked and the share price might grow a bit. But what you can see clearly is that up to this point so far, the main reason why these stocks are so heavily valued is because people are betting on this company to leverage that debt and grow heavily, which is going to happen, no doubt. But when the debt flattens, again, the next era of growth comes. That is going to be again something that has to be in question, because once you reach a point, growing after that comes with certain stagnancy. So the share price may grow even after that, but I can see much more lucrative options for myself to invest in and generate more returns, which is why I won't be investing in the stock, although you may choose to. So that's all from my side, and thank you for watching this video till the end, and I hope you have a good day. Bye-bye.